Good afternoon guys, it's Mitch Walsh, Sales Director at Elavace. I wanted to talk to you today about some of the articles that have been in the news lately built around the COVID-19 pandemic. Now naturally, while this is an uncertain time for a lot of investors, I wanted to give you some advice and guidance on how as property experts are looking at the current market. So as I'm sure that you're aware, the COVID-19 pandemic has had a significant negative effect on all markets across the world, and the property market has been no different. From the start of March to April, we've seen a drop of around 70% in property transactions, according to Rightmove and Zoopla. However, from the start of May, we've actually seen an increase already of around 20%. Now, what this increase in sales indicates to me as a property investment professional is that the initial uncertainty of the pandemic is now over. Now, people are feeling much more confident about looking for alternative investment options rather than your typical stocks and shares, which are really uncertain at the moment, or leaving your money in the bank. Now, what history has shown is that one of the most stable markets for investment is the property market. It's a secure market, it's an actual physical asset where you can achieve a solid return on investment in regards to your rental yield, but also where you can achieve a solid appreciation value over a period of time. Now, where we have seen a decrease and we're expected to see a further decrease in property values, this is expected to see a sharp return and increase early into 2021. So for me, this is a perfect opportunity to be going to developers such as myself and asking for potential deals for cash investors. Now, one of the things that comes to mind is a quote from Warren Buffett: savvy investors are greedy when other investors are cautious, and cautious when other investors are greedy. And I think that's relevant in today's market. Now, where there are times of uncertainty and a lot of people are being cautious, this is a time for cash investors to maximise on the opportunity and look at the deals that are available around them. So I'm going to talk you through a couple of different scenarios that have had a similar effect on the market of what COVID-19 has. Now, the first one of these to discuss is the global recession. Back in 2007, we've seen a significant decrease across the market. Now, the recession was a perfect opportunity for people that had cash available to pick up investment opportunities and property opportunities that wouldn't have been available before the recession. Now, according to data from the UK Land Registry, during the Great Recession, property values dropped between 2007 and 2009 by around 18%. Now, what we did see in 2010 is an increase of around 8%, and we've seen a total recovery by 2014. So, while the outlook looked negative from these figures alone, as mentioned before, there was a full recovery between 2009 and 2014. Now, where things are a little bit different, the Great Recession was caused by failures of financial institutions across the world, whereas this has been a global pandemic which was out of anybody's control. Now, what this says to me is that we will see a much quicker and sharper recovery on today's market in comparison to the Great Recession. Now, another difficult market which provided times of uncertainty for investors and the UK economy as a whole was Brexit. Now, the uncertainty had people predicting that there would be a drop in the property market by over 10%, when in reality, the actual drop in 2016 was only 1%. Now, let's fast forward to October 2016, where we actually seen a significant rise in property value by over £2,500 on average. Now again, fast forward to October 2017, we've actually seen a significant increase in the property market by over 4.5%. And this growth continued into early 2020. Now for me, this gives me a lot of confidence in today's market. Similar type of uncertainty has now started to ease, and I'm expecting the property market to make a swift recovery just as it did in the times of Brexit. Now, one of the things that's causing concern for investors, which you've probably seen in the news, that UK unemployment is at its highest rate since 2010. And this is again expected to shoot up at the end of June when the current furlough scheme that is in place criteria changes. Now, people are looking at this as a negative, when for buy-to-let investors, it's actually served as a positive. So the reason that I say that this is a positive for buy-to-let investors, while first-time buyers and people buying property to live in may decrease quite significantly, the amount of people that are looking to rent is expected to rise significantly. So what this means is there's going to be more people looking to rent, which means buy-to-let investors are going to have a much wider market and a much higher demand for rental property. Now, for people who know me and follow our company, you will know that we offer a 360 service. So not only do we develop property, we also sell property, and we also have a lettings team that manages the property for our landlords. So our lettings team have a number of things in place that offers protection to our landlords. Now, one of the things that is most beneficial to our landlords is rental guarantee insurance. So we're in partnership with a company called Elavace, who are one of the market leaders for rental guarantee insurance. Now, for me, rental guarantee insurance is a particularly useful tool in today's market. So while unemployment is at an all-time low, this gives protection to our landlords in the event that your tenant is unable to pay the rent up to £2,500 a month. Now, what it also assists in is things like legal costs. So in the unfortunate event where you would have to evict the tenant, there could be some quite significant costs in doing so. And this will again assist you in covering costs, which will make it much easier when it comes to the time to evict a tenant. Now, that's it from us here today. Thank you very much for joining us. Now, if you would like any further information from myself or one of our senior property consultants, please get in contact on the information below. Or if you are a landlord that would like to know how our management service works, again, please get in contact on the information below.